Welcome back to Christian Finance for your almost daily financial content. And today we're going to be taking a look at the latest Cathie Woods and what she has to say about the current markets. It's mainly negative for the short term, and we'll be taking a look in general why the markets are trending downwards in the last week or so, and why many speculate will continue to be headed this way in the short to midterm.
Now, is there anything so far in the earnings season or the economic data, anything else that would make you waver in your conviction of the growth trade?
What we do see in these earnings results is that we are in a recession. And we've been calling for a recession for quite some time, a lot of it based on excess inventory. So we think this is an inventory-led recession. And I think that's coming through loud and clear. We're seeing advertisers cut back dramatically. It seems like when Walmart and Target announced in May that they were loaded up with inventories, and this was far above what they had expected, and that they were going to have to do something about it.
I mean, absolutely, it's bad when you have Target and Walmart saying that they have an excess and inventory at any given period of time.
A lot of advertisers started cutting budget, saying, okay, this is a possible recession indicator. And as you know, we've just gotten 2 consecutive quarters of negative real GDP growth, but a lot of people still are fighting the notion that we're in a recession.
And Cathie is also correct that yes, we are in a recession. We already did confirm the 2 negative quarter of GDP growth, or should I say decline. And despite what the Fed and Jerome Powell want to tell us about employment numbers and other lagging indicators, fact of the matter is, officially on paper, we are in a recession. And I don't think we're going to get out the next quarter or 2 based on the information we have coming in.
Yeah, certain people are fighting that notion. A lot of economists like yourself, there is a technical recession. But then there's also what a lot of folks, including Fed Chair Jay Powell, says isn't necessarily recession. They define it as a broad-based slowdown across a number of industries. Are you seeing that?
I think this is a recession. And I think what the Fed is really focused on is employment as a gauge. Employment is a lagging indicator. The CPI, the PPI, all of those are lagging indicators. If you look at initial unemployment insurance claims, they're up 50% from the low. So I do believe we're going to see some significant disappointment in the employment numbers moving ahead. And I also think based on what we're seeing from gold, the gold price actually peaked in August of 2020. Many people don't know that. And it's down near the low end of a range, a 2-year range. That's an important inflation gauge.
And once again, I have to agree with Cathie. As I said a little bit beforehand, employment indicator, and now she confirms CPI as well, they're both lagging indicators. Source that has been used, and really the main one to put us in an official recession, there's a reason why it has been based on GDP growth, right? It's because it's the most accurate in-time data point that we have. And I very much once again agree. I believe very soon employment will catch up to where it should be, where unfortunately it will be a lot of people getting laid off and out of jobs, right? And even gold being down currently in the grand scheme of things over the last 2 years is another negative indicator. Now, I do want to go over somebody I very much respect in the financial space, definitely in the top 3 people that I look up to when it comes to investing, and that is Michael Burry, right? Obviously, his claim to fame predicted a 2008 housing market crash, shorting it, making himself and his investors a lot of money along the way. But now, as the latest of what he has to say is NASDAQ, a bull market because it is up 20% off its low. After 2000, the NASDAQ did that 7 times as it fell 78% to its 2002 low. Yeah, and something actually very similar could be happening right now. As we can see, just on the day, for example, we're looking at the Dow Jones here, but it's down 2%, right? On the 5-day, it's actually down 2.5%. And NASDAQ being a little bit riskier metric because of the stocks involved in there and there being more growth stocks in there. As we can see, it's actually down 3% in the past 5 days. And all those indicators being taken into account is another reason why we're headed into turbulent times, aside from all the macroeconomic factors right now that we're experiencing, right? Which is inflation, increase in interest rates, both simultaneously. Also, the war, pandemics, supply shortages, excesses of supply in some instances, right, which is also not good, especially considering it's Walmart and Target, as Cathie was mentioning. These are all negative indicators that we're headed in turbulent times in the short to midterm. Now, having said that, as I always say, this is a time that you guys need to do your research and really focus on those long-term plays, because this is a time that you want to start dollar cost averaging into your long-term convictions, right? So please do yourself a favor, start doing that research and start investing when the prices are low, right? Now, yes, they might get lower, but that's the whole point of the dollar cost average strategy over a long enough time period. As long as you're investing in a good stock or in a proven crypto such as Bitcoin, as long as you're satisfied with the research that you've done on that, you're going to be fine the next 5 to 10 years. And this is the end of the video, guys. Let me know what you thought about it down below. Do you think that we're still going to be in turbulent times in the short to midterm? Or do you think that bottom in May will be as low as we'll get in the next little bit? I'd love to hear your guys' perspective and opinion down below. We're all here to help each other. Let me know other similar financial content you'd like me to do next. Once again, please subscribe to the channel. And as always, guys, stay diversified. Okay, guys, just before I continue with the video, I just want to take a moment and ask you to like the video, subscribe to the channel, and hit the notification button. So this way you won't be missing anytime I upload the almost daily financial content that there is on this channel. Once again, only thing I ask, guys, subscribe to the channel.